So there's the gold price over the past, this is the month of July. So there is coming out of that July 4th weekend. They're selling off the US dollar. They're bidding up gold price. They're selling off US dollar. Can you see how coming out of the July 4th weekend, they bid up the Swiss franc? There's one hell of a trade, no doubt about it. And interestingly enough, you can actually even see, I even penciled on the trade. Better than a 3-to-1 risk reward, just risking that M and looking for a tag of the 50% rule. So it isn't necessarily that I want to go and buy a whole pile of US dollars, but you can see the W that's trying to form. It did make sense to a certain degree why Bitcoin was getting bid up if you think of Bitcoin as a currency, because in essence, you could make the argument that while the US dollar was getting its head handed to it last week and thereabouts, right? So this trade really started, looks like, right after the July 4th holiday weekend. And this makes perfect sense, right? Where I told you that after that July 4th holiday weekend, usually people come back to the market feeling a little bit more optimistic, not so much, it's Brian's birthday, sell everything, get the fuck out. But maybe companies actually are earning some money. Who knows? And they start, bidding up risk assets. And as we said earlier, this is by definition, if you are bearish of the stock and risk markets, then you probably want to just bury your head in the sand, go buy US Treasury bills, collect the interest, and just ride out the bear market and wait for things to bottom and then turn back up. Seeing this thing come down quite a bit is quite literally telling you that the world economy is trying to sort of reflate. And I get the impression that a lot of this was driven by, China's reopened, they've come back, everything's going to rock and roll. Lots of anecdotal evidence that the Chinese economy is booming and all that, which I think is a load of horse shit. But anyway, and the Europeans were starting to raise interest rates, which I don't know whether that really helps the situation or not, but it does sort of justify taking money out of US and putting it into Europe, or even maybe just taking money that was working overseas and repatriating it back to Europe because they're paying you a half decent rate. So the point here is US dollar did get bitch slapped, put out tweets and stuff to the effect that you probably don't want to trade this. You want to be hunting like all the pairs. And what I did find interesting past week or so was things like the Swiss franc actually set up really, really nice, well telegraphed trades. But I don't know, you tell me, what letter of the alphabet does this kind of look like up here? Maybe if I do this will help you think about what I'm thinking here. Well, what are we supposed to think if we ever see the market smiling at us? Kind of like what you saw with Bitcoin. It had a big rally. These currencies, they usually trade off of like things, especially Swiss franc. Historically, they like to base everything that they do off of gold. They actually tried to connect with the Europeans about 10 years ago or so. That didn't go very well, and they actually disconnected themselves and they went back to sort of being a currency on their own. And I think I showed you earlier, like the gold market looks very, very similar to this. So there's the gold price over the past, this is the month of July. So there is coming out of that July 4th weekend. They're selling off the US dollar. They're bidding up gold price. They're selling off US dollar. Can you see how coming out of the July 4th weekend, they bid up the Swiss franc? There's one hell of a trade, no doubt about it. And interestingly enough, you can actually even see, I even penciled on the trade. It's better than a 3-to-1 risk reward, just risking that M and looking for a tag of the 50% rule. So it isn't necessarily that I want to go and buy a whole pile of US dollars, but you can see the W that's trying to form. And interestingly enough, this came on a 4.669 tag. So it's interesting how the US dollar tagged its 4669, just as the NASDAQ, it tagged its 4669. So it's almost like this whole damn move was totally telegraphed. I don't know whether this is bottomed yet or not. I mean, obviously we did have kind of a sloppy W come in here. If anything, this is a really good example of that. Well, it's Monday, so don't be surprised if there's some FUs going both directions. I'm sure there was probably a lot of people that were short on this counter trend rally. Then the market started to roll over. They quickly moved their stops to just above these levels. That would be pretty typical. So they ran all those stops out, a whole bunch of cheap liquidity for them. And now we're just basically back in the range and they're just going to be banging around here. And, let's see what happens to our Tuesday, Wednesday London kill zones. I wouldn't be surprised if there's still a little bit of effery around all this, but I did find it fascinating that sort of that kind of thinking along the lines of the tweets that I put out that, the Swiss franc is looking very toppy. Hasn't topped yet. They brought the market right back down to that level, but then you can see they stopped the selling. It's interesting how if we look at Europe, there's not really much to do there. Made a new high, did some backfilling, and it's just chopping. And if anything, kind of looks to me like this has still got a little bit further to go. There's nothing to do on the euro. British pound, same thing. V top, kind of looks like that oil market. So this doesn't have anything to do with European currencies. This has more to do with what is Swiss franc based off of, and it's a gold trade. So let's maybe take a look at some other commodity currencies. How about South African rand? Can you see the M top trying to form here? Sloppier than slop. I'm not going to say that's pretty at all. I wouldn't really even suggest that there was a realistic trade that's set up here. So I always like to check this thing out. It's so handy having this little tool just right at your fingertips. Don't see any divs here yet, so I'm not really ready to get all bearish on something like that yet. But nonetheless, you can see the M trying to form up there. No divs here yet, though. Willie is stupid, though. Then maybe let's head on over to Asia. Maybe it's something to do with Asia. Oh, hello. Now, what did I say earlier was the real reason why maybe gold prices might be coming off? Can you see the letter of the alphabet there? I don't know whether there's actually a trade here or not, because it does look to me like this is a bit old, right? So there's the breakdown. Your stop has to be up at new highs and targets 50% level. So it's not even a one-to-one risk reward, but can you see the top? If anything, this is a good example where you may not take a trade, but are you hearing the market's message? I thought that was really interesting. We actually do have, look at the wicked div that came in here on MACD as we push to new highs here. Just brutal. We even have a volume impetus signal here. Look at that. Most beautiful volume impetus signal. Confirms, I guess, on a bar below that one. Let's see, what is this? 114.8, 115, 111, 81, 58. So a bar below this low here. 1, 2, 3. And you can see that came in right there. 19,000. So volumes rolled over. Really, it was nice and stupid. I mean, I don't really like the trade here because it's going to be tough to make that 2-to-1 on a 50% move. But I think you can say, I mean, can you not see the writing on the walls here? What did I say? What was the reason why this thing might be coming down? And then if we think that the Swiss franc is a proxy on gold, we looked at gold through the free video. And remember, gold's got a nasty top. Why would this thing have M tops working? Swiss franc, South African rand, to a certain degree, the Australian dollar, all very, very sensitive to gold price. Gold is supposed to be a what hedge? An inflation hedge? Clearly, the market must be getting some, I don't know, do we use the stupid term that all the talking heads are using? Do we say deflationary news? Whoa, we're not allowed to say that word. Well, sorry. Disinflationary, because you can't say the bugaboo word deflation. Didn't we talk about somewhere in the world potentially actually going into a deflationary spiral? Remember we showed you this? China's Q2 GDP growth below estimates. Do you see how this could potentially be very, very deflationary? Are we in a commodity friendly cycle now, or are we in a commodity unfriendly cycle? I mean, me personally, I think that we are in a commodity unfriendly market right now. And we will be for the next 10 years. How ironic, eh? I guess the point I'm trying to make here is it doesn't surprise me that the gold market looks like that, given the econs coming out of China.